Hello, 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 everyone. Mike Arnold here, co-founder of Path Trading Partners, along with Bob Iacchino, who should hopefully be on today. How is everyone doing? Let me adjust the microphone just a bit. There we go. Let's see who's whoa, jumping around here well, pretty much like the Nasdaq did today, back and forth all over the place like this. Whoa, 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 whoa. See, like that. That was the Nasdaq today. Uh, hey everyone, VIX is moving down, but might see a reversal tomorrow after Powell. What do you think the market volatility is going to be like? I think there's going to be some volatility, especially during the meeting, and not during the minutes release or the. We'll just peek in tomorrow during the uh, press conference, but not when the decision. Everybody, the decision is pretty much baked in, so we'll see with what the press conference says. That's going to be key in how they guide moving forward, and if the guidance catches people off guard. At least that's my impression, but we could get some volatility in the morning also. Hey, Josh, AMD raised their outlook. Yeah, we'll take a look at AMD. We had that little double bottom, and they beat earnings. Davey says it's a Vegematic day. There was a lot of intraday volatility, but I mean, pretty flat, slightly up over all over. Bit sideways today, yeah, was slightly up bias. Lauren, hey guys, ping pong in the Nas. It was like watching a fast game of Pong. Hello, options 22. Hey, Christoph. So today we had factory orders coming in 2.2, a lot higher than forecast. Uh, a lot more job openings and a lot more people quitting their jobs. And then we just had a bigger than expected draw on the API crude oil stock. So you can see here, very mixed day, except for energy. Energy up very strong today. So, and some banks were up today pretty much. Mega caps were mixed. Tomorrow, again, the pretty much 99.1% for that 50 basis point, and negative gamma territory still clearly in negative gamma territory. So with those meeting minutes, we could get some continued volatility if it catches some people off guard. AMD, we'll take a look at that after market. Airbnb also popping up. I know that. Starbucks, I have to see what the price chart is now, but they were missing on earnings, it looked like. And then tomorrow, it's going to be really the Fed day. Nothing major moving with the markets in the morning. Besides, we'll have to check with Bob. If he ever shows up. If Bob ever shows up, well, I mean, he's going to be fully focused on
Did you just hear
Ferrari
that?
earnings tomorrow. Ferrari earnings, I mean, that's all he's going to be glued to. So
Gotta
we
watch
shall
those
see
Ferrari
about
earnings.
that. Where do we sit? And this was the ping pong day back and forth. Oh boy! Before we bring Bob on here, let's see. If you're new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term viewers, keep up the comments. We've been getting some more comments, which is very beneficial. I've been replying to some of them, and consider coming back, commenting, and leaving that thumbs up. Sorry, when Bob jumps in, it's so distracting. It's like when a Ferrari drives by you on the street. You just got to stop and it catches you off guard.
How
And
about
here
those
he is.
Ferrari earnings?
Huh?
How about those Ferrari earnings?
Ferrari earnings tomorrow morning.
I know, I'm excited.
You are. You seem really excited about that.
So even when they miss earnings, they still beat McLaren. Ha! They still beat Mercedes.
Well, the F1 this year, they're handing it a little to Mercedes, but for a number of years, they're getting their butt kicked by Mercedes.
They were. And McLaren a couple of years before that, but we're back, baby.
You're back. You got
Yeah.
a
My
young driving crew, so you could be around for many years.
my culture is back.
Oh boy, wavy, hello, hello, chop, 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 chop. Yeah, it was very choppy today. Let's hear. You know what? I am rather tired. I'm going to turn this one over to Bob and take a nap.
Really?
Yes.
I'm so excited.
You seem very excited. That sounded like me with deadpan voice. I'm so excited. Look at the
Um,
monster rally. I'm so excited.
so I'm looking at the futures right now, which are a little stronger. We obviously closed a little stronger. The futures haven't moved that much. We just had some good reports. Starbucks was good. AMC was good. I got to look and see what AMC
AMD?
did.
You mean
I'm
AMD?
sorry, AMD. I'm sorry, AMD.
AMD and AMC are two very different companies.
Yeah, they have a slightly different value structure, I'd say.
Yeah, we had
Um,
this little double on the 4 hour that we've talked about, and with the targets 95.01, 96.62, and 98.23 already above that. We were before above the first target, now just pulling back a bit, but that's
well,
definitely
it's
going
up
to trigger.
almost 4% post market right
Yeah.
now. Let's see what AMC is doing. I bet it's not doing that well.
Why are we looking at AMC?
I don't know. I mean, you turned it over to me. You
No,
know
but
I'm
we're
an
looking
ape.
at AMD.
I don't even
Uh,
know what ape means. Oh, down 20 basis points in the
oh,
aftermarket for AMC.
uh,
Um, God, that chart is so ugly.
what,
Oh
AMC?
my God. Yeah. That's just horrendous.
Well,
See, now I got you.
oh, that's
Look how much they've done, and they haven't even really tested the rotation zone or any of that. I mean, it's just
oh.
like ugly.
Now let's get back to something that matters.
Yeah, let's get back to something that matters. Um, I'm calling a medium term bottom.
A medium term bottom. What's a medium
Yeah.
term bottom?
So a medium term bottom means it's not a long term bottom, but it might last longer than the couple of rotations we've seen recently. Um, and I'm not saying it's going to reverse the bear market. As you guys all know, the bear market is we need to have new highs to be out of the bear market for the Nasdaq and the Russell. And the reason I say that is because you look at, so tomorrow we're going to get a 50 basis point rate hike, right? And in the face of that, we have a bunch of milder data across the world, really. You had China's Caixin indexes, China's Caixin PMI indexes go into contraction. We had EU employment figures miss. We had Germany, which of course is the engine of the EU, their employment figures miss. We get their retail sales tomorrow. We had Jolt's jobs openings um, beat. So in other words, show more openings than was predicted, more openings than last month. That's interesting to me. That's an interesting little dynamic when you look at what was expected, where it was, and then they revised the openings up. This is the one where like more jobs opening or more job openings is really a good thing because, well, theoretically a good thing if you're long assets because long equities, because it gives the Fed theoretically some more breathing room. So we saw yields back up a little bit. We saw the 10-year hit 3%. And we see this a lot. There's these predictions, right? And one of them, or recently a prediction was like, um, Dow getting back down to 33,000 would have been a prediction, right? And holding there, things like that. But you look at the 10-year getting to 3%, that's been a prediction for some time. And it's one of those things that like, okay, we got there. And a lot of market participants think, okay, we got there. That's it. We don't have to go any higher. Well, I don't agree with that. I suspect that what we're seeing here is a medium-term period of time where we're going to see yields go lower, maybe even below 270 on a 10-year. Just kind of back up and back up and back up as we start to see weaker economic data. And the reason I say medium term is we're probably going to see a little bit of base effect in the inflation readings as well. In other words, you're going to see the inflation readings start to drop down to, from plus 8.5 to plus 7.2, plus 7.6, numbers like that. Maybe even have a 6 handle. But then it's going to stay there. And the Fed's going to have to reiterate that they have to be getting that inflation down. The scenario for the general economy, if we have slowing, which Mike and I have talked about on this live stream, we both see it, and we have a Fed raising rates, which they're going to have to do 100 basis points. They have to. They have to do at least that. The market, as of yesterday, was pricing in 270. I think they're pricing about 230 or 240 right now, as of today. They have to do 100. They probably have to do 150. And they can actually start to give an indication. I don't think this will be true, by the way. But my theory is they're going to give an indication that the supply chain will work itself out now to take care of the rest of the inflation that's still in the system. And that won't be true. It won't. I suspect that's going to be their excuse to slow down on the rate hikes. But I think it's after 250 basis points. So that'll also happen somewhere right around the midterm elections. They'll want to appear nonpartisan, which I think is too late. I should say non-political, not necessarily partisan, but non-political, which is way too late for that. But they're going to want to appear non-political, and they're going to back off right around election time. And that's probably when you're going to start to see it roll over again. I still think we see a recession. I didn't expect to see a negative GDP quarter already, and we have. I still think, Mike, I think it was you that said, when I said I think we'll get a recession in Q1 or Q2 of 2023, I don't remember if you told me I was early or late versus
I
what
expected earlier. I expect
Okay.
us to be in a recession.
Well, right now you're right. Because all we need theoretically, in my opinion, is another quarter of negative growth. And that could be this quarter. Certainly could, especially when you look at the data we're starting to get. But I think we're going to start to form a medium-term bottom here. And it's not going to be an exit from the bear market. I think we might go 30% higher once that bottom is formed. And then it's just going to get awful. That's what I think.
All right. Well, there you have it, everyone. Medium-term bottom for Bob. So better than a 2-day rally or a 1-day rally.
Yeah. Okay, look at the rally that started in mid-March, right?
This one.
Correct me if I'm wrong. Is that the Nasdaq or the S&P? I can't tell.
That's the S&P.
Okay, so if you could put up the Nasdaq, if you don't mind. All right, so from the all-time high, those lows in March, I believe, was the 20%. I believe that's 20% from the all-time high.
Well, I just want to see what the rally percentage was. So that rally was about 18% up.
Yeah. Now remember, the rally up, if that's a 20% rally down, 18% rally up, it's not going to be the same measurement. It's not going to be the same amount of points.
Correct.
Because of the percentage effect, right?
Yeah, and I just wanted to see that decline was down 22.8.
Okay, so we had an 18% rally within the bear market. A 30% rally, let's just say it's off of yesterday's lows. I don't want to make that tight of a prediction. But if you have a 30% rally off of yesterday's lows, where's it going to be about?
Well, now I got to expand my chart.
Sorry.
Look at this. You're making me work for a living.
I apologize.
30% up?
Yeah.
That would pretty much take us pretty close to.
All right, so I'm going to revise that. I'm going to say 20% because we're not going to get. I don't think we're going to get above that base just right there. Yeah, I don't think we're going to get above that that December base.
Well, that would be to this base right here would be about 23%.
Yeah, so I'm going to say a 20% rally from here, not 30. I'm glad we're doing this because I haven't said this on TV or anything yet, but I would say that would be about the max of it. I also think we likely won't spend too much time over the 200, so it might even be less than that. But it is going to be a decent rally, and it's something people can take advantage of theoretically. But you got to be real careful because it's still a bear market rally, and they can just spin on a dime and collapse, I think.
Yep, that's where it gets interesting because, again, it's tactical trading for me. Anything could change at any given day.
Yeah.
So it's always, you catch a position. That's why I like to unwind portion and just trail the rest because worst case is it turns around on a dime and hits your stop, but you've locked in something.
Crap. I will be right back. Give me 1 second.
Sure. Well, I will keep going. Again, we have that potential double in play on the Nasdaq. So we're going to be watching for that. We're still a long way off. We didn't even get to the rotation zone today. S&P, man, these levels were good today. These levels were good. Look, right up. We covered in the live stream this morning, 41.92, 41.95. We had the harmonic there, which was based off this reverse harmonic back from the 2nd of May. And look at that nice topping, forming that double top. This is still one side of the same top. Little correction back down to the bottom of it. And then just remaining choppy the rest of the day. So I'm just going to review a couple things here. You're back. I see. I'm just going through the S&P. Forward harmonic now. If we break above of this 41.95 area, 42.13, 42.30. And if you look here, you're still into a longer term clear path, and that would take it back to the 50 exponential on the 4 hour. Here's your clear path. This is advanced clear path on a 1 hour, and you get really starting above this 4200 area, which is also this breakdown zone. You easily have the clear path up to that 4230. So that's what I'll be watching for the bull case tomorrow. And now Bob's back.
I'm back.
I'm done.
And he's gone.
And I'm done. So what other thoughts, Drew? Let's see what's on the economic calendar again for tomorrow. We have
Fed decision.
What was that?
Fed decision.
Well, besides that, earlier, we have ISM, non-manufacturing PMI. That we could see a contraction.
By the way, here, I'll send you something, Mike. I think we've looked at it before, but I'm going to email you something right now that you can put up. That was sent to me by an extremely talented analyst named Cameron Dawson.
You emailed it, huh?
I'm about to. I haven't yet.
Oh. Making me sit here with my inbox, waiting with bated breath. Let's see who else is here. Josh, do it for the apes. Good afternoon. Yeah, I saw that wavy. Elon plans to take Twitter public again later. I think he's got to buy it first, though.
Yeah, we don't even know if he's going to buy it yet.
I mean, all the stuff and people are acting like he already owns it still. I'm like, no, he doesn't. They're like, yeah, he owns it. I'm like, no, the deal's not closed. You got to
coming back on the platform, making requests of him.
Buy it. I know. So let's see what. All right, I think it just showed up.
What is Weeble?
Let's see. Okay, Boomer. I'm just kidding. I just wanted to say that once. All right, what's
you say? 3 years shy of being a boomer. It's just I remember, I know that name, and I'm like, what? John, no offense to you, John A., but I'm like, what a silly name, Weeble. Anyway, so this chart here was one of the main reasons that one of the main sort of downturn indicators that Cameron Dawson sent me, talking about slowing and how the U.S. was slowing at a slightly higher rate than the rest of the world, and it was market composite PMI. I don't know, is it market composite coming out tomorrow, or is it ISM?
It's ISM.
Yeah. So those PMI and ISM numbers are leading indicators from an economic standpoint, looking at the overall economy. When you look at these boxes she has highlighted and what happened to the overall economies here, watching these three together. And again, we already saw the Cation PMI go lower. They're very correlated, obviously, all the different purchasing managers indexes. So what these composites actually matter, especially in the U.S., because we're such a services economy.
Yeah, so it could be. That's why I'm still focused. I mean, the big thing is tomorrow, of course, the Fed, and especially the press conference. I don't think the interest rate decision is going to do anything. It's the press conference that I'm paying attention to with volatility.
Right. See if there's any change, right? I even think the statement
they'll
might matter
find the
more.
statement and everything else, but the bigger thing is going to be with the press conference. If there's something that really surprises the market, we could see some volatility with that.
Mm-hmm.
So Abraham's positioned himself to gain tomorrow. If the market is moving big up or down, I will lose if the market is not moving. So you essentially have on a big volatility play. Long Vega. What else do we have tomorrow? That's about. Then we have our EIA numbers and everything else. But again, big thing tomorrow. Let's see. What do we do overall? Nasdaq. Nasdaq again. We're still in this double bottom pattern. Uh, on the 1 hour. That's not yet hit the first target. So I'm still watching. We have this probability still favoring the upside for tomorrow with a follow through at least in the morning. And what else? Let me just go over these numbers while Bob's responding to something.
What
If
numbers
we,
you want to go over?
I just gonna do the numbers I'm targeting. If we run up overnight, I'm watching for a 13,171, and then above there we have a major cluster at 13,229, and that would take us. 13,171, 13,198 would complete the first target, which is a stop raise in that double. And then I'm using 13,230 as another stop raise before 13,274 as partial profits. 13,274 to 13,287. That's what I'm keying off of tonight with the Dow's just Although the harmonic again 33,243, that was the key resistance today on the pullback move. What else? There's something else. We had net. I wanted to show this too. Last week we had flows with. This is the flows from last week. We had tech and healthcare, the biggest inflows at the end of last week. You had tech, big inflow, and you see way above the 4-week average. This is a B of Bank of America Global Research. Healthcare, big inflow. Consumer discretionary actually had a big inflow, and consumer staples had another inflow also. So you had these big inflows. Well, who is doing those inflows? We have the magic inflow institute. It was not retail. You see, retail was a little net outflow last week, not substantial. I mean, this is not the big, but you had hedge funds moving into the market big time, corporate moving in, institutional moving in big time, and hedge funds actually reversed their 4-week average of getting out versus now coming in, and retail was pretty much flat. So we don't see retail really dumping yet, but we see this bottom being bought up by institutional hedge funds and corporate. I thought that was pretty interesting. Again, Bank of America Global Research.
So that actually makes a lot of sense from a perspective of what's going on, because you will see institutions, because they can sustain down moves, loading up on tech, because obviously over the next 5 years you want tech, right? You don't want consumer discretionary right over the next 5 years. You don't want defensive stocks over the next 5 years. You want tech. But tech also could get hurt the most in the next 12 to 18 months, where it won't matter as much for an institution. I'll tell you what 2 charts I really like, Mike,
What's
and I
that?
can give you a fundamental reason for them. Look at a Walmart weekly and a Dollar General weekly.
Walmart weekly. Yeah, Walmart, that's a nice chart. Back to the prior major resistance becoming support with the rising rotation zone.
Love that chart. Dollar General looks very similar, but I like the Walmart one better.
And the daily hasn't rolled over, but even if it does, you could get a nice double cross pattern. It's holding the 50 on the daily. And Dollar General.
Yeah.
Dollar General also just slightly below prior major support, but holding the rotation zone. And remember, support's not a brick wall.
Right. I like the rotation zone slightly more than top channel support like that, me personally.
So,
Especially if it bursts above that with the rotation zone holding, it tends to be a really good pattern. But for both of those, they're obviously more medium term because they're weekly charts.
mm-hmm.
And you can take a little bit of heat. Like if you're looking at a daily chart, you could take a little heat. But then from a perspective of the fundamental side of these, if inflation is not going to be brought under control, which I don't think it will, who's going to benefit the most? It's going to be your Walmarts and your Dollar Generals. Walmart is really good at slashing prices when they need to. Really good at it. And then Dollar General, more so than Dollar Tree, Dollar General has a more consistent lower price profile. Dollar Tree has that $5 aisle now. So I like Dollar General fundamentally better than I like Dollar Tree, but it's probably the chart probably looks similar. Um,
I mean, here's your Dollar Tree.
is that a weekly?
That's a daily. It's back to this prior breakout level. Here's your
It's not
weekly.
bad.
And it's back to the rotation zone on the weekly.
Okay, it looks like it's overall stronger, but I like the pullback and the support better in Dollar General.
Yeah,
Anyway, I like those two for like medium term in a way of taking advantage almost of a medium term rally because Walmart's going to do really well in this environment. They've taken big bites out of Amazon. And one of the reasons they haven't been able to take even bigger bites out of Amazon is people have not been doing price comparison. And in my own anecdotal experience, Walmart's cheaper 2 out of 3 times. You can wait that extra day for delivery, getting things in 2 days or 3 days instead of one. You can save a lot of money using Walmart online. And I suspect the inflation and the lower class to lower middle class drying up of the savings. Savings rate is declining. Total overall savings hasn't fallen much at all. But when the savings rate is declining and this number of savings hasn't fallen that much, that generally means that it's lower class to lower middle class people whose savings are getting eaten up. And they're the exact people that would shift from Target to Walmart, shift from Amazon to Walmart, shift from Amazon to Dollar General for certain things. You need a bunch of paper plates. You might just go, I'll just do Amazon and get them here tomorrow. Now you might go, well, let me see what Dollar General has, or what Walmart has. So I really like the fundamental story, and that's what made me look at the charts. I looked at the charts. I'm like, yeah, I like these charts a lot.
Question for you.
For me?
Yes. What do you take away from the Eurozone and PPI numbers that came out this morning?
Well, this actually fits the narrative that I described, right? So you got PPI. First of all, the EU is behind the US. They were behind them in COVID. Now they're behind them in their inflation trajectory. They're not behind them in the slowdown. And I suspect that has quite a bit to do with Russia, Ukraine, but I don't know for sure. That's above my pay grade. The ECB is in the worst position of all central banks because they stand to have the most dramatic slowdown because of the conflict, the war, yet their inflation hasn't quite peaked. So this PPI will be in their next set of CPI, consumer inflation figures. It should be bad. It should be really bad. So I hate Europe right now. I hate their economy, and I would hate to be the ECB. I mean, they're going to have to hold off and then just tighten massively aggressively. There's going to be a really good euro currency trade coming up. I don't think it's come up yet, but it's going to be a really good one.
So you think they still have to hold off and then they'll go on a massive tightening spree?
Yeah, they're just going to have to go very aggressive. They have a less likely soft landing than the U.S. does by a wide margin.
All right. With inflation running so high, why do you think stuff like gold got hammered as much as it did?
From you, or is it a question?
No, that's you. I'm asking you.
So gold actually isn't a very good inflation hedge. People don't realize that. They talk about gold being an inflation hedge, but gold's not an inflation hedge. Gold is a pre-inflation hedge. So gold has actually done better in periods of anticipatory inflation. And then it's fallen off during periods of inflation. And it has more to do with the relationship to the Fed and the dollar than anything. So the inflation relationship with gold it's a threesome. It's a menage a trois with the dollar and the Fed. I could probably use a better. Anyway, part of the reason gold sometimes is called an inflation hedge is because inflation is often driven by free money, by an excess of money supply. And gold's driven directly by that. When the dollar gets devalued, the value of gold goes up. When yields are falling, the fact that gold offers no yield becomes less of a hindrance to the price of gold. So actually, when the Fed begins to fight inflation, even if it's not successful, the actions of raising rates is taking fiat currency out of the market and hurting gold. Now, I will say that May is the first 3 weeks of May. It's a very seasonally strong period for gold. And 1850 is a psychological level in gold, and it's held it so far. But the first 3 weeks of May is a seasonally strong period for gold. So if the Fed does start to back off, gold's likely to get bid up again based on that and the seasonal strength. I suspect this seasonal strength will be a little bit lighter because the seasonal strength is driven by the wedding seasons and the holiday seasons in like China, India, Pakistan, because they buy a lot of physical gold. It's still very much the traditional gift out there.
Wavy asks, Bob, what do you think about Apple putting a 30% tax on all apps in the App Store?
I don't know if I necessarily have an opinion on that. I don't know. You know, Apple, as much as we like to look at the services part of it, they're still more of a hardware company. So I don't know, Wavy. Honestly, I haven't thought about that enough yet. I don't know that it's going to make a big dent. I mean, if you're a captive of Apple, you're a captive of Apple, and that's it. I mean, I haven't bought an app in a long, long time, so I don't know if that applies to free apps. I don't know. I haven't thought about it, Wavy. Honestly, it's not on my radar. I could put it on my radar and maybe make some comments Thursday. I'll take a look at it.
All right. So once that euro bottoms, we should see a nice topping play in the dollar index.
Yeah, yeah.
We had a
I don't
potential.
know when it's going to happen. I mean, we just had an ECB meeting. Did we, or do we have one this week? I can tell you in a quick second. We have 3 central bank meetings. One was the Royal Bank of New Zealand. The other one is
We had Australia, didn't we?
Australia. I'm sorry, I said New Zealand. It's Australia. Bank of England is Thursday. Okay, so next ECB meeting could be when it happens because they'll have to make some comments addressing it. They'll have to.
Yeah, I heard the last time Fed raised rates by half a point was 2000.
Wow. I actually remember that because I was in the Euro currency pit then. I remember I was at lunch. It's like, that's 25, whatever. The place went nuts.
Yeah, that's a long time ago. I can't remember last week. 22 years ago?
It was right around the time, you know, that Nova documentary that I'm in, Mike? It was right around that time. I think it was a few months before that.
First time since 2006 the Fed has raised rates in successive meetings.
Sounds right.
Yeah, so it's been a long time. We've been in this. I mean, just think about that, how long we've been sort of in an easy monetary policy. That's a long time. All right. Anything else you want to chat about?
Nope. I'm good.
All right, then I'll get back. Thank you for being here. You'll be back. Well, unless something really shocks the market tomorrow. I mean,
Right. I mean, are you doing like an FOMC one?
not live, but
Okay.
you
Well, I don't think you'd be broadcasting live, but there's a chance if it goes crazy with the FOMC, I might join in on this tomorrow
all right.
afternoon.
Well, if it goes crazy or they do something shocking,
Yeah.
we'll see. But other than that, I'll be on for the preview and the overview tomorrow, and then Bob will be back on Thursday, right?
Yep. Tell W. Bowser I have a Harley as well. I don't have a Ferrari, but I have a Harley.
Ferraris like Harley Davidson, they seem to make more money licensing their brand on T-shirts and goofball stuff than they make money on selling vehicles.
Not off of me, buddy.
All right. Yeah, good stuff. Let's see what Powell says tomorrow. Thank you for being here, Bob. I'm going to switch back to small mic and hit
All right,
the
guys.
disappear
We'll talk
Bob
to you
button. And he's gone. And I'm back. All right. Real quick, just overnight, if we do pull back, this is just very, very choppy. I mean, this was actually a mess today. My first level I'm watching is about 41.61 the S&P, and then back to 41.43. And major, if we did have something out of the Eurozone that's really shocked the markets is 41.26. Don't want to really see it get back to this 50% level of this run up. I already went through the targets. Nothing's really changed on the Nasdaq. Still watching for that higher prices because of the probabilities. But the major pullback level for me is about 1327 to about 13,000. And the Dow levels tomorrow, you can see we kicked off this 33,243, which was a pretty nice hit today. 33,340 area tomorrow, and major level for me is 32,812, and the minor would be 32,19. Russell, there's just nothing great. Returning essentially to that, I talked about that 1905 level. Again, little pop here, but even if we rally up, that's the last thing I'm turning to now because I'm watching for a potential stall out or a rollover, especially if we get back to 1927. Crude, it's the breakout or breakdown play. There's nothing going on there. We already talked about gold, finding that bottom. Silver, trying to put in a little short-term bottom. Notes, coming back down, but still holding this 1804 harmonic level. So if it does break lower tomorrow, 1730 and then 1722 essentially. But I'm watching if we do rotate back about 11902 for a potential early play to get on with this double. Let's see. Uber. You wanted to look at Uber, William? Did you see Lyft and Uber? Well, I no, obviously didn't because I've been on the live stream. But Uber breaking them down. Well, there we go. Oof. Oh boy. Oh boy. See, remember, closed back below the 62.5. Now it's hit that 75. I'm expecting this to drop back to like over the next while. Over the next few weeks to months to down to this 87.5 harmonic, about $20. Yeah, that's a brutal chart. Lift and also down. Wow. And again, close below 62.5. Now that's all the way down. Look, 23 and our 87.5. Because remember, a close below 62.5 favors a return to the 87.5 to 100%. So that's the first target area, which would be this little spike low from October. And that's coming to about 21.43. We're 22.91. So can we easily hit, even in the next few days, that? Oh yeah, that's ugly. That is ugly. This is why I really pay attention to the probabilities. You don't want to be holding stuff that gets below that 62.5 because it can fall a lot more. If you still want to pick it up at a lower price. Oh, that's ugly. I'm trying to learn how to read the harmonic. My question is, when we hit the 62.5 harmonic, do we see a rejection from it automatically, or it just depends? I watch for a reversal. See how we found some support in here? Okay, see here, this is a really good example. And you watch it on the closing basis. Don't watch, it's not a, people make that mistake. It's like, oh, wait, we dipped 1 penny below. It's 34.71, we went to 34.70. It's violated. No, it has to be on a closing basis. Nothing is that firm in the markets. Even people who say support resistance, it's not like a floor or a ceiling, it's a zone. Keep that in mind. So this is an area, but you want to watch it on a closing basis. On a major, so this was your major run up. You see how it bounced. You see all these tests? Look at all these tests. 1, 2, 3, 4. Close below. Favors your return to the 87.5% harmonic by a substantial amount, and then this is actually a zone. So in here, but then I first target the 87.5. Because anywhere in here you could form a more substantial bottom. But look, I mean, we're already down 22.79, and that was 21.28. So, well, again, your daily charts are going to have more precedence over a 1 hour chart or a 5 minute chart. It works on all time frames, but the probabilities as you get now, also don't watch for a 5 minute close on a daily chart below this. Don't go, all right, 34.71. We closed on a 5 minute chart below a daily key level. It's over. No, you gotta, don't mix up time frames to that extent. That won't serve you well. Now, if you're trading a 5 minute chart on a 5 minute move and using 5 minute key levels, then you're going to watch a 5 minute levels, or even a 15 minute chart. You can watch the 5 minute. Remember, I talk about be within one time frame either side of what you're watching. So when I'm watching the daily, I'm focused on the 4 hour and the weekly. When I'm watching the weekly, I'm focused on the daily and the monthly. When I'm on a 4 hour, I'm focused on the 1 hour and the daily. And time frame should roughly have a separation of about 4. Except I'll go from the 4 hour to the daily just because of you don't want to go 4 times 4 of 16. 16 hours is nothing. But like if you're watching the 5 minute, I'm going to be keying off the 15 minute, 15 minute to the 1 hour, the 1 hour to the 4 hour. You want about 3 to 4 periods of separation in there. But that's how you utilize it, and we utilize it in a lot of different ways because I've done so much testing with the harmonics and the various different levels. And the one that a lot of people can use to spot is this 62.5. So again, even though Uber's just back below it, and you look, you had a potential double, but now you're actually below the 75% harmonic. So does that mean like tomorrow I'm going to watch for the 87? No. We get rallies and bounces. I'll watch for return to the rotation zone. Rotation zone, boom. Rotation zone, boom. And eventually just grind its way down there. Is it guaranteed? No. But it's got a very high statistical probabilities. And William, Boeing, what's changed though, William? You ask for these things like all the time, but nothing's changed. It's just return to the harmonic on a continued strength back to the rotation zones. What I talked about, and I'm still targeting on any bullish area, this gap down open with the 37.5 harmonic into the rotation zone. And long term, I'm watching for another rotation back down lower. So nothing's really changed. It is getting closer to the gap, and you get a close in here. You can also use your gap harmonics on this. So on a shorter term chart, you can use your gap harmonics. What would be the key level for the gap harmonics? You got to go from the close to this low, and that's going to be your 62.5 right here. So you're watching on like and based off how long this is taken, I'd be watching for at least a 4-hour close above about 158. I don't know, 09. I'd have to zoom in on that level. I don't want to mess up my charts. Then it statistically shifts to favoring the gap fill, but I'd really want that intraday move above 160.91. Let's see. VIX and Tesla can. Let me look at the VIX first, and then we'll do Tesla. Then I'm wrapping this up. Again, VIX. I was watching the return to the 30 level, which were essentially back there. And then we don't have a double on here. We break below that. I'm watching going to 27. So tomorrow, if we continue a rally, I'm watching to see how it reacts down at 27, which is also this key close right here in the bottom of the rotation zone. On a move back up, at this point, I'm bumping it up right about here because this has some significance now. So my key level is about 33.40. Tesla, again, into the just missing that little area. There was very slow trading in Tesla today. Not much going on, just a little horizontal channel. So tomorrow I'm watching if we break below about 9.0, I'd actually go about 900. I'm watching for the backfill move. in order to get the strength on anything, I needed to get above about 930 to the upside. If you want to try to front run that, it would be above about 920 with some momentum. But remember, we got Fed Day, we got the numbers coming out at 9 a.m., so we could have some very interesting trading tomorrow. So anything would be tight stops. Hey, Sterling, you called it this morning sideways up, real IV crash today. Yeah, and then we'll see what goes on tomorrow. I mean, we just got to trade the patterns. And the patterns played out nicely today. Even though it was choppy, choppy with an upside bias still. What are your general thoughts surrounding the Fed? Bearish or bullish? I think we'll continue a bullish move unless the Fed says something that shocks the market in the press conference. Why do I say that? Because I'm just going with the probabilities of the patterns. We completed that double top on the Dow and bounced. We still have this double bottom play in here. All right, now longer term, I'm going to watch. I'm a little less bullish than Bob. Bob's a lot more bullish than me. But I'm watching for continued upside plays. And then another rollover play. So that's where I stand tomorrow. Now, just reminder, don't put on blinders and just go, oh, I only have to worry about stuff, 2 p.m. Eastern to 2:30 Eastern, don't ignore this ISM non-manufacturing PMI if it's a big contraction. If this comes in, if this drops like below 55, it could get interesting. All right, so just don't go, oh, there's nothing until the Fed tomorrow. Because they're 9 a.m. Central, 10 a.m. Eastern could potentially give you some volatility in that. All right, just want to caution that. I'll remind everybody in the morning. One last thing. All right, Sterling, one last thing. BP play worked great. We had that double that triggered on the gap open and then continued all the way up. So if you weren't in it behind earnings, you had to use this as an intraday play. Right? So, and it just never looked back and look at we're next level above here. What was the next level I said to watch for? Does anybody recall what I said to watch for? I think I still have a line there, don't I? Right here, the breakdown zone from the clear path move and the 87.5 harmonic right there. So, kaboom. There were your targets. And then it just stalled out there. See, look at that thing of beauty. If it breaks above there tomorrow, then it's the end of this clear path, which isn't the highs, by the way. It's a 31.25 area. What's interesting again is longer term play. If you might get a pause up here, but then longer term, you don't have you have a clear path move then to about 32.48. I'm not expecting that tomorrow by any means, but for the next key level up after a little pause is getting, you might be getting to a little cycle top and an overbought. So it doesn't have to drop. You could get a sideways basing move above there, but then you start breaking above these most recent high areas. Next target is 32.48, 32.50 area. You glad you were in it, Sterling? I'm glad those levels worked out for you. Again, that's what I'm just trying to show. And I'm not just here showing magic levels. Like I'm trying to show everyone how I come up with them. So you can do it too. That's my goal. And then once you do it, you can do a super chat or something else. Not you, Sterling. You're doing the Twitter stuff. I'm just... I'm trying to teach you guys how to fish, not just, oh, look, I could easily do this in the background and then say, oh, here's the magic levels from my magic mic mind and just spit them out there. But that's not going to help anybody. Then how do you become self-sufficient? You don't. was 200% gain in options from yesterday. Buy, William. Well, I'm glad that's a nice booking, a nice gain, Sterling. So again, I'm going to wrap this up for now. It's gone almost an hour. I'm feeling a little tired. Got to be on my game for Fed Day tomorrow. I will be here in the morning. Everyone have a great night. If this information does help you and you are new here, even watching the replay, please do consider subscribing and leave me some comments. I really want to know what people think if you could take advantage of these levels. You don't have to say what you made or not or anything else. I don't care what your profits are. I just want to know if this information is helping you become a better investor and a better trader. Until then, I will talk to everyone later.